Altcoins are finally starting to wake up, and the market is giving off those early alt-season vibes. We're seeing some large-cap altcoins explode with massive moves, but at the same time, quite a few are still stuck or lagging behind. But here's the question everyone's secretly asking: are you in the right coins, or are you about to get left behind when the real alt-season hits? We're going to unpack all of this today as we dig into some powerful indicators we didn't cover in the last video. As always, I'll keep it real with a balanced take on where we actually stand right now, instead of just pushing hopium narratives with no data to back them up. The reality is, some signals on the charts are flashing extremely bullish triggers, while a few others are hinting at the possibility of short-term pullbacks before the next leg up. We'll also dive into historical trends to figure out what the best rotation plays could be this cycle, so you can make the most out of this alt season without getting trapped at local tops. If you're someone who values real data-backed insights that most people aren't even paying attention to, hit that like button right now. It really helps the channel grow and keeps us motivated to bring you deeper breakdowns. And don't forget to subscribe if you haven't already. You can also support the channel by joining our YouTube membership for just a couple of dollars. You'll get early access to videos, behind-the-scenes insights, and a lot more. The link is in the description below. Alright, let's jump right in. Here we have the total crypto market cap excluding Bitcoin on the monthly time frame. Right now, price is sitting just under that key 1.51 trillion resistance level, with a strong long-term upward trendline holding as support. Notice how this level has acted as a major rejection zone twice before. First during the peak of the 2021 cycle, and then again during the election rally in December 2024 and January this year. But there are a couple of crucial differences between that election rally and what we're seeing today. The first is funding rates. If you remember the December rally, altcoin funding rates were ridiculously high, showing clear signs of market froth. This time, funding across most altcoins is still quite normal and hasn't entered overheated territory yet. The second difference is open interest dominance. This metric tracks how much leverage is flowing into altcoins compared to Bitcoin. When altcoin open interest starts climbing above Bitcoin's, it often signals retail is getting way too aggressive and overexposed with heavy leverage. Back in December, altcoin open interest dominance surged past Bitcoin's, and we all know what happened next: cascading liquidations across the board. Currently though, altcoin open interest is sitting at around 33%, while Bitcoin's is at 42%, which is a fairly neutral setup. These differences show that the current rally is building on much healthier foundations compared to last time. If this monthly candle can close above the red resistance line, it would confirm a new higher high on the macro timeframe, opening the doors for a potential quick move towards the previous all-time high around 1.7 trillion. The structure looks clean, funding is stable, and global liquidity remains supportive. Altogether, it's shaping up to be a textbook breakout setup for what could turn into an explosive alt season ahead. So to sum this up, a monthly close above resistance sets up the entire market for a strong continuation rally. Before we move ahead, let's zoom out to global liquidity, because ultimately that's what powers every single altcoin rally. Markets are powered by liquidity, and right now, global M2 money supply is sitting at record highs. We've covered this indicator before. Bitcoin tracks M2 with roughly a 12-week lag. Notice in December, Bitcoin briefly ran ahead of that liquidity trend and then corrected from 108K back down to 92K. Today, Bitcoin still has room to catch up. To match the current M2 trend, Bitcoin would need to be trading near 130K. If Bitcoin pushes higher toward that level, the total crypto market cap should follow, and that could be what finally breaks us above the $1.5 trillion mark. That move would also likely send the ETH-BTC ratio through the 0.30 resistance it's been testing. During 2021 cycle, ETH reclaimed this resistance, retested it as support, and then exploded from $1,400 to $5,000. That kind of momentum could happen again if we clear this pivot. On the flip side, keep an eye on Bitcoin dominance. It's hovering around 62%, and we've now seen 3 weekly red candles. If a fourth red close comes tomorrow, it'd be the first time since 2022, and that was during a bear market. Go back further to March, April 2021, and you'll see 4 straight red weeks before dominance plunged from 62% to 40%. This move kicked off an alt season that lasted nearly a year. We're in a similar setup now, though I don't expect dominance to collapse all the way to 40% again. There's massive institutional inflow into Bitcoin this cycle, so altcoins may struggle to keep pace. But even a drop into the low 50s would spark serious altcoin rallies. Another chart on my radar right now is Total 3, which tracks the total market cap excluding both Bitcoin and ETH. It basically gives a pure view of broader altcoin strength without being skewed by the big two. Recently, price did manage to break above its descending resistance line, but it couldn't hold and slipped back below. This shows bulls aren't fully in control yet. It's worth remembering that the last two times Total 3 approached this upper trend line, it faced sharp rejections. Both the December and January rejections triggered sharp pullbacks across the entire altcoin market. While a breakout looks possible, we're approaching a heavy resistance zone near the 1.1 trillion mark. If your altcoin bags are in good profits right now, taking some chips off the table here wouldn't be the worst idea, just in case history repeats and we get another rejection like before. However, if Total 3 cleanly breaks above this zone and retests as support, that would flip the entire structure bullish and open the door for much bigger moves. Until then, staying cautious makes sense. Another metric I'm closely watching to decide when to clip some altcoin exposure is the long-term holder MVRV. This one focuses on Bitcoin held by long-term holders and is great for spotting local tops and bottoms based on their behavior. Every time this metric has jumped near 4 during this cycle, like in March and November rallies, we saw altcoin markets correct soon after. It's not an end-of-cycle signal, but more of a short-term profit-taking trigger. Historically, it can go way above 4, but if your short-term trades are sitting in solid gains, booking profits near the 4 level isn't a bad move. Currently, it's sitting at 3.3, so I'll personally look to close out some of my short-term positions once we get closer to 4. Next up is this chart tracking the combined dominance of USDT and USDC stablecoins. In simple terms, it shows what share of the total crypto market cap is sitting in stablecoins instead of risk assets like Bitcoin or altcoins. At the moment, stablecoin dominance is around 5.9% and approaching a crucial support level at 5.18%. If you look at the two red circles, you'll see that the last two times it touched this zone, in March and December 2024, we saw strong rallies in altcoins. The logic behind this is straightforward. When stablecoin dominance falls, it means money is flowing out of stablecoins and back into the market. People are moving off the sidelines and buying altcoins, creating upward pressure on prices. Right now, stablecoin dominance seems to be forming a potential double bottom at this critical support level. If it breaks below 5.18%, it could trigger another powerful rally as fresh capital enters altcoins. On the flip side, if it bounces from this support again, we might see a short-term cooldown in altcoins as traders rotate back into stablecoins. Overall, this setup remains bullish for the broader altcoin market as long as dominance continues trending down and fails to reclaim higher levels. Definitely worth keeping a close watch on in the coming weeks. Alright, now let's get into the part everyone's been waiting for. My rotation plan and how I'm looking to exit some positions. Before we dive in, just keep in mind that we're dealing with a lot of moving parts here. This plan is dynamic and might need adjustments depending on how things play out. If you want to track my moves in real time, make sure to follow us on X. I post all my trades and data-backed insights there regularly. So apart from these technical charts, it's important to keep an eye on overall market sentiment. If you look at Bitcoin, there has been a slight uptick in Google search trends. Nothing crazy like we saw in November 2024, but it's definitely up from where it was a few months ago. Interestingly, the search interest for altcoins has jumped even more, which tells us it's not too early in the game. Retail is already starting to get involved. You can also see old dinosaur coins pumping again just like they did back in November. Yes, this will continue for a while, but remember you need to book profits before the music stops. This is just my personal plan, and you'll need to adjust yours based on your entries and how your portfolio is structured. You might want to hold your altcoins all the way to the cycle top, but for me, clipping profits on altcoins and rotating during dips has worked really well this cycle. If you're new here, I've had a major chunk of my portfolio in Bitcoin and stablecoins for a while after selling some alts during the November pump. I did buy back during the April dump, but right now I'm mostly in large cap altcoins and Bitcoin. As I've mentioned before, I'm expecting a dip sometime around September, mainly due to seasonal liquidity patterns and potential macro headwinds. So my overall goal is to take some gains off the table before then and redeploy during that pullback. I'll also be using this rally to cut down on dead weight in my bags and rotate some capital back into Bitcoin and partially into stables where it makes sense. One of the key metrics I'm watching to time my exits is the Altseason index. If this index moves above 90, that will likely mark a huge rally in altcoins and could signal a good window to risk off a bit. I'm also keeping a close eye on open interest dominance to see if it flips like it did during the election rally back in November and December. What I mean by that is when altcoin open interest starts climbing above Bitcoin's open interest. Historically, whenever this happens, it has marked local tops for altcoins. That would be the perfect time to sell underperforming altcoins into stables so you can rotate into stronger coins during the next dip. As always, I'll leave links to all these charts in the description so you can keep track of them yourself. Apart from these indicators, you need to keep this specific rotation playbook in mind. When Bitcoin's trend score moves above 50 and altcoins start pumping hard, it usually means we're entering the danger zone. If Bitcoin crosses 75 and both altcoins and meme coins search terms hit 100, that's a strong sign the market is hitting peak froth. This is usually the phase where all the lagging altcoins finally catch up and match the early runners. But here's the harsh truth. If your altcoins aren't pumping even in this phase, then you're basically holding a bag of regret. I'm not a financial advisor, but personally I would sell that immediately. At that point, it's no longer conviction, it's just denial. These high search trend scores are your signal to start taking aggressive profits on your altcoin positions. This is exactly what we saw play out during the election rally. Bitcoin search interest spiked first, then altcoins followed, and finally meme coins exploded. When memes are pumping while Bitcoin is just moving sideways, that's a classic red flag for a short-term top. Right now, though, we aren't in the danger zone yet. Bitcoin's trend score is sitting at 48, altcoins are at 58, and meme coins are way down at 18, so there's still some room to run. In short, keep tracking these metrics, stay disciplined with your rotations, and don't get too greedy. Let me know in the comments which coins you're planning to exit and what you're rotating into this cycle. Always keen to hear your plays too. Also, if you found this breakdown valuable, make sure to like the video, share it with your friends, and subscribe if you haven't already. Thanks for watching, and I'll see you in the next one.